And that sound means that we are now live here on our halftime report, Tackle Trading's daily show, where we break down the stock market news, the charts, the information, anything really grabbing our attention that we find interesting, insightful, and want to share with you guys out there as a way to help you with your daily routine as we run our daily routine as traders in the market. Welcome out to today's show, Monday, 9/14/2020, starting the week out on a bullish note here in the market. Stocks are rallying. They're bouncing a little bit off of the sell-off that we've had. Still not out of the water yet. There's no question about it. We're going to break down the charts and some of the news. Some news out of Oracle, potentially a deal with TikTok. Sounds like they won the bid, not done yet. We'll break it down. Some M&A activity as well. And a really, really dire report out of BP about oil demand, which we've actually been saying now for a long time as well. So BP, thanks for getting on board. We'll talk about oil here as well. That chart looking pretty ugly. Got a full crew here today. We got Matt, Mark, myself, the regulars, and Cody on the back end producing. Matty, how you doing, sir?
You know, Tim, I'm doing fantastic. I'm excited to be here with the team today and to break down the market, obviously today from a technical perspective, but also just from a news of the day. And then, you know, talk about kind of those major storylines that are going to play out this week. We got central bank week this week. So get ready for some. We will do whatever it takes to support the stock market commentary, insert economy instead of stock market, but what they're really talking about is the stock market. So just get prepared for some of that, and not just out of the United States. This is like, I was going to do the joke, this is Shark Week, because we got the British reporting on we got the Bank of London coming out this week. We got the Bank of Japan coming out this week, and we got the FOMC, the Free Open Market Committee, coming out this week as well. So it's going to be a fascinating week of who can be the biggest dove game.
It's always a fun game, right?
It's a fantastic game.
It's a fantastic game.
Okay, so in a world of the British, the Japanese, and the Japanese, interesting enough, guys, Yoshida, I'm going to butcher his first name, Suga, is going to be the president of the ruling party of the Liberal Democratic Party of Japan. I don't know if you guys saw that news come out today. He was President Abe's right-hand man for basically the last 8 years. And so he became the elected official, the president of the Liberal Democratic Party out of Japan. He's Abe's right-hand man there, and which basically makes him the next in line to become prime minister. So you're basically going to see an extension of Abenomics that we've seen in the last 8 years. And it's going to be a fascinating game this week, Chucky. Just an absolute fascinating game of who can be the biggest dove.
You know who I like? You know who I think is going to win?
Who's going to win the game this week?
Gold and Bitcoin.
Well, okay, that's blasphemy that you put those into the same sentence. But okay, I do understand the gold one. But who is, looking back a week from now, who do we think is the biggest dove out of those?
Listen, the United States has the biggest printing press today. If you want to know if it's going to happen forever, go back and review the 3-part podcast Matt did on. I mean, I've got a lot of good feedback on that podcast series, and Matt, that podcast series.
That is feedback you have yet to share with me, by the way. Thank you for that.
Well, I've been saving it for when you're down.
Oh, okay. A little pick me up.
A little pick me up, like, oh, Matt's depressed.
Yeah.
I like it.
Matt, you're not in a good mood. Well, Bob from Ohio tells you that you did a good podcast.
So. No, thank you, Bob. And the number one feedback in the thing was, man, I'm never going to be able to look at this stuff the same way again. So welcome to the depressed buy your guns and gold club for the future.
Get your 3Gs that we're going to update to 5Gs real soon as 5G comes out. No, you know, I'm glad. You should look at it differently. That's the purpose of understanding the historical argument, is so that you do see things a little bit differently. So I'm glad that's the feedback.
Who do you got the biggest dove, Matt?
Because my intention wasn't to make sure everybody thought about the dollar the exact same way. That was not my intention.
Who do you guys have as the biggest dove right now? Because I think it's really hard to replace Japan. They've had that Abenomics in place for a very, very long time, Matt. We're talking decades of very soft.
Yeah, but come on, it's the tortoise and hare analogy that comes to mind. They were the hare. They got out there fast, and they're like, we got all of this. But man, the United
Um,
States just over time is going to catch up and make Japan and Abenomics look like child's play.
Oh, I agree with Mark there. You know, Japan's been doing this stuff so long. They've had so many recessions based on it that it's just par for the course with them. They're the old dog out there. I mean, I think they've had 4 recessions in the last 7 years. So they're fully used to this. They're not going to change their ways. We're doing as much as we can to catch up to that. So in playing the who's the biggest dove, I'd have to say Jay Powell. I think Jay Powell is going to come across as the most dovish.
Mm-hmm. Mm-hmm. Well, we'll break down the Fed a little bit later in the week as well. They do have that meeting on and the press
No,
conference
Cody.
on Wednesday.
No. Kramer's not dove. No.
Shell.
He's a shell.
He's a shell.
Well,
He's a poser.
Yeah.
no,
No,
he
he's a
definitely wants
cheerleader.
more money. He wants to hear that printer go burr.
No,
He's a millennial cheerleader right now.
Jim Cramer should be ashamed of himself. But it is a Monday, and we're on all
Yeah,
good
it's
mood.
a
So that is the last
positive
time we're going
Monday.
to talk about Jim Cramer.
Don't bring
today.
up Jim Cramer again here. I agree. All right, let's break down the charts.
Yeah, I got too much to think about with the Feds this week.
without Jim Cramer.
I don't need to analyze the cheerleaders of the Fed.
That's right. That's right. Give me a read on this chart here, Matt. Obviously, we talked about that, and you did a really good job breaking down the intraday technicals last Tuesday when the markets opened and how we needed to see specific triggers. We even had those conversations on Wednesday and Thursdays as charts developed. We're now still in between those moving average pockets here, Matt. And in my opinion, on the intraday, we still have some of the same triggers in play. Nice green candle today, but how are you reading the technicals?
Stop me if you've heard this before. What you want to see. This is what you want to see. And we've seen this from the bullish perspective for the last week. Yeah, in these types of sell-off conditions, it gets a little hairy, gets a little scary, gets a little volatile, gets a little bit of everything, right? The analysis gets a little more complicated. Make it simple. Talk about the things you want to see. What you wanted to see is you wanted to see that 50-day moving average hold. You wanted to see that double bottom scenario 3,300. We've got both of those scenarios. And if you don't understand the importance of how intraday analysis really works, look at this on a 1-minute chart for a second. On Friday during the sell-off, and we've talked about this zone being such an important zone of support in the halftime report many times, but that 3,300 zone, right? We talked about it all week last week too. That 3,300 zone. Look at this on a 1-minute chart. 1 minute, where does it come into? 3,300, gets gobbled up, comes down, retested again, 3,300, gets gobbled back up. And so that zone of support right there at 3,300, ensuring that zone holds its support level and isn't broken, that is so important in this analysis if we're going to see that buying opportunity. Now, there's going to be buying opportunities in every market condition, every day, every second of the world. But what I'm talking about isn't a singular component of the market. I'm talking about the market itself confirming that next leg up, because even in the nastiest environments, you have good bullish trends, and even in the best environments, you have good bearish trends. So when I'm talking about that confirmation, I'm not talking about it on one individual component. I'm talking about it from a broad-based market perspective. And so seeing 3,300 hold multiple different times last week with that 50-day moving average, showing it additional support is very important, but you're not out of the woods yet. Yes, up 61 points on the day. That is a very, very, very good thing. Up 1.85% today. That's a very good thing. But where are you struggling with this price appreciation today? You're now starting to come back up into these known areas of resistance. Right here, you have old resistance over, old support over here. You have old support over here. Now, where is that level? Right there underneath that 3,400 significant hold number. Well, that's acting as resistance now. And so the same scenario happens as support, where you're double testing that support, giving you a little bit more confidence in that support level at that 3,300 level. And now we're testing those resistance levels. And we're at one of those moments in time in the market that's very important in the short term. And I'm not talking about tomorrow or the next day. I'm talking about right now, this very second. If this market can confirm above 3,400 and you start seeing those higher highs, higher lows from an intraday perspective, you're going to start talking about potential confirmation as you get back above this moving average pocket that we discussed last week between the 20 and the 9 EMA. Where is that 9 EMA today? Literally at 3,400. It's kissing off that
It's almost
level.
like algos sell and take profits there. You know?
Yeah, like algos aren't buying and holding. That's not what
let's say algos, they buy up and they're like, take profits.
So the algo is not emotionally invested in the 60 minutes they're making a trade. They're not turning a day trade into an investment.
No, and with in the weekend prep class last night with our pro members, I went over and I'm like, this is the whole battle this week, right? It's like, I mean, there's not a lot of news. It's a real battle of sentiment. It is a genuine first-class technical battle. And if you're new, like, there's a good chance you've never seen anything like this, right? If you've just been trading since the pandemic. But these setups are not uncommon at all. You see, in fact, you see them on intraday charts every day somewhere. And they're very common on daily charts. In fact, they're even common on weekly charts. And what you have is a genuine battle of sentiment, a genuine technical battle with a support zone that's now developed, with an intraday resistance level that's developed above one major moving average, below a short term. This is a classic battle. And what my words of advice were, what I'm doing, I haven't been doing a lot the last 3 days in trading. A little here, a little there, nothing major. I'm going to wait to see who wins.
Let me pin you down on that for a second, though, because which one's more important, the technical battle or the sentiment battle? Because
I think they're completely tied. I really do. I think I saw a report over the weekend that over 50% of the option trades out there are from small individual investors right now. It's at a really high percentage, and defined as people trading 10 contracts or less. And I think a lot of those individuals, new and old, they're a little skittish, right? They're a little skittish. If the technical battle wins, sentiment comes back, right? Hey, stocks never go down, and everyone rallies and throws up their flags and things are great again. If support breaks, that skittishness is going to really manifest itself and could exacerbate a technical breakdown that doesn't have a lot of known support underneath it for a good 5-6% on the market. So I think they're really tied together. I think it's a fascinating theater. And I wouldn't mind it hanging out here for a few days. I have a feeling Jay Powell on Wednesday might tilt it one way or another.
Well, catalyst definitely.
I think the sentiment battle right now is sitting back and be like, please, for the love of God, break out. Please. I think they're cheerleading the charts right now. I think I think the technicals are more important. I think sentiment will absolutely follow the charts.
Well, I was very curious about Monday morning. Obviously, I always am about the markets, but during the rally, Monday mornings have been extremely bullish. Last Tuesday, which was our quasi Monday for last week, was a very, very bearish day. So I think from a sentiment and a technical perspective, if you're a bull, you got to be happy with today's price action.
Yeah, that was the problem.
We're not out of the range yet.
That's the problem in this market. Last week, the first trading day was a Tuesday. It broke the whole trend, right? We didn't have a trading day on Monday, right?
Mondays.
Yeah.
To be fair, Monday was actually fairly neutral coming into that Tuesday.
It was absolutely
Monday, but it kept the trend there. But to finish the technical discussion here and looking at that 9 EMA, guys, one of the reasons I feel like this is such an important moment, and I'm not talking big picture economically, I'm not talking about radical things, I'm talking about confirmation in this marketplace, this specific moment in time. But if you can get up above that 3,400, that would be the first time where in this sell-off here, and you see the rounding bottom, you see the U shape in the momentum, you see the U shape in the highs as well. And so you have this U shape starting to form. You have this U shape really forming on the highs too, and it's really kissing off that 90 MA. Look at that 90 MA and look at the role it played here. Look at the role it played there. Look at the role it played there. Look at the role it played there. And just today, look at the role it's playing as well. And so, you know, whereas the market was double bottoming at support, and we identified both on the 30-minute chart, and I lowered it down into that 1 minute time frame to kind of get that bird's eye view there. But you're seeing that 3,300 level really act as that strong catalyst of support. And that's step one in this bullish retracement. You got the retracement, you got the support bounce. Now we're waiting for that confirmation, right? And so you're getting initially what you want from a bullish perspective. You're getting that support bounce and you're fighting for that confirmation. A close above the 90 MA would be positive, but you still got to look at the historical ranges when you're looking at it from a horizontal perspective. And that's where you're looking at confirmation right there at that 34.23 from a aggressive confirmation. A more conservative confirmation would be in that 33.45 to 34.50 range. So if you can get back up above these areas of short-term resistance, at that point, now all of those areas start acting as support instead of resistance, and it gives that market a little bit of bounce going back up to the top side. So I think we're at one of those moments in time where it's like, okay, let's still be patient. There's trades to be made, no doubt about that. But I'm again talking about, you know, the market here. So let's be a little patient here. Let's take our stabs. We're getting excited. We're dipping our toes a little bit. And then if we confirm, then we start getting a little bit more aggressive, because then the entire market is supporting on a multiple time frame perspective.
You know, and I was trying to look ahead of the week at catalyst, and obviously Wednesday stands out with the Fed. Do you guys know any data? Because this Friday is quadruple witching day. You guys know any data? Because normally I just brush it off.
On witching days?
Yeah, on the quadruple witching day.
Can I give let me get my take first. I think it's complete garbage, quite frankly.
Okay.
I've always thought it was garbage. I think that it's completely just overblown gas on the fire from Wall Street guys who want to make it out to be this huge thing. And sometimes you get a little bit more volatility those days. You get volume pickup, but I haven't seen it play out the way that.
Well, shit, Tim, tell me how you really feel about it.
I hear about these witches.
He stole my take.
No, it is so stupid. It is
stole my take.
The blustering about how important quadruple witching has been over the years.
Tim, is it lazy analysis?
It is.
It's lazy analysis. Would you compare it against the lazy analysis in the VIX over the last few years?
No, I would not. I don't like the way you're trying to pull that in. No, they're non-correlated.
Yeah, one's dead and one's still around that actually plays a role. But I agree with Tim, Mark. I think when we first started trading, when everything wasn't algorithm driven and you had a lot more subjective analysis in it, I think it played a little bit bigger role on the sentiment, because it was something all of us traders really kind of focused on. We knew those days were extremely volatile days, but kind of like the central bank, you know, in terms of monetary policy, when we first started trading, that monetary policy was so important. I mean, you lived by the calendar on when those days came out. And over the last 10 years, that's just became less and less important as the market has become more efficient. And so as algorithms have taken over, and now we see a large percentage of total volume in the market being algorithm driven, you're talking about more efficiency from a you know, expiration perspective. And so I just don't get jacked up over those days any longer.
Yeah, I don't think it's going to be a catalyst. You're right, Chris. I did throw a 5-gallon bucket of water on
Tim.
Tim
Didn't what was that challenge? The one challenge where you threw
the
a
ice bucket challenge.
Ice bucket. Tim didn't do that. He didn't throw a 5-gallon bucket. He took like a big old dump truck and dumped, you know, ice water on it.
Man, I'm not used to Tim talking like that. I'm a little taken back. Feel like I'm like, all right, I'm going to try to. I'm trying to tread in light. I mean, the Bears won yesterday, so Tim's feeling feisty, you know?
We need Tim to stay sick. Everybody hashtag.
Oh my goodness!
Sick. It's like when Phoebe got sick with a cold and her voice sounded better, and all of a sudden, like, she wanted to get sick. Yes, I'm showing how, my age there.
Dude, a
But
Friends
you're
reference.
Phoebe, bro. You're
Hold on.
Phoebe.
I got to put a stop loss on Friends references.
Oh,
I mean,
really?
come on.
Wait,
Really?
no, there's nothing
Oh,
wrong with Friends
You're
references.
gonna fight you're gonna fight generational battles there, bro.
Yeah, you're not gonna win that one.
Dude, I was a Seinfeld guy. You were either a Seinfeld guy or a Friends
No,
guy.
you
It's
weren't.
like
I
the
was
old,
both. I like
it was
them
like
both.
the Rolling Stones and the Beatles. Or
Oh my
Seinfeld or
goodness.
Friends. You
Your
couldn't like
guys'
both.
fake wars you have to
No.
create are so cute.
No, I
Tim,
get
I'm
it.
going to ask your permission before I say anything snarky the rest of the show.
You got Mark on edge, bro.
I think I might have used the energy I had during that little rant, though. I'll see if I can fire some back up. By the way, I did not expect a quadruple witching discussion, so thank you, Marky. I do appreciate that. That
And if you're
put a light under
curious,
my-
if you're curious out there what quadruple witching is, it's when stock index futures, stock index options, stock options, and single stock futures all expire on the same day. So lots of options expiring on the same day.
Yeah. By the way, the charts across most of the indexes are looking very, very similar. Matt, we don't always go to the Russell, but give me a quick look at it if you can. I just want to get a read on the way you're seeing this one trigger, because obviously, dependent on different things, you've got companies that are more going to be doing business here in the US, very much weaker than the other indexes. Matt, is there anything there that interests you besides a breakout at 1600?
When I am interested in the Russell 2000, I promise you I will break it down from a technical perspective when I'm breaking down the two charts that matter in the NASDAQ and the S&P 500.
Yeah, this one feels a lot weaker.
I don't have interest in the Russell 2000 as of right now. And quite frankly, I've not had interest in the Russell 2000 since, when was it? October, November of 18, maybe, when I called the breakdown and the Russell started leading. The Russell has not, ever since the Russell led that initial breakdown. I'm not talking pandemic breakdown. I'm talking the trade war breakdown. The Russell 2000 has underperformed in those environments. Even in strong dollar environments, weak dollar environments, the Russell 2000 has underperformed the marketplace.
Yeah, it has. It's been and it's been a lackluster one. I mean, guess it's good for cash flow condors traders out there if it does move into a neutral range. Let's see if we're interested in the next one, though. Let's look at crude oil, because there was some interesting reports over the weekend, Matt. I know you and I talked about this in pre-production, Mark, as well. BP, the oil giant. And I want to make sure I get this exactly what they had to say. They said they have become one of the first major oil companies to call an end of the era of oil, basically saying the best scenario for demand is going to be a flat outlook, or broadly flat for the next 2 decades, Matt. They don't believe that oil consumption will ever come back the way that it was before coronavirus, that this catalyst has changed it on a trend that was probably going to be changing for a long time. Previously, they had said that it's going to take a decade or two to get to these kind of things. And then we also saw that OPEC cut their 2020 demand outlook.
And
Maddie,
2021 too.
And 2021. And Maddie, obviously, we've been talking about this for a long time. You have a changing world. You have changing consumer behavior. You have changing way that we approach investment into companies that have clean energy versus traditional fossil fuels. What was your take on the BP report and the OPEC report?
I think this is the first leg to kind of fall in those traditional, type of projections we've seen in oil. Most of those projections in peak oil consumption from a global perspective have that in the 2040s. Most of those projections do, that our oil consumption will continue to, increase over the next 2 decades. And that's just something I don't believe in. But Tim, the pandemic, I thought that before the pandemic. I've been saying that for quite a while now. And the pandemic just kind of, and I truly do believe this, that the pandemic simply uncovered some of the underlying problems in our society. And don't get me wrong, the pandemic has been terrible. It's been nasty. It's been life altering, but it's unmasking some of those problems that we already knew existed. And so the pandemic simply unmasked some of the problems we already knew existed in the airlines. It's unmasking some of the problems we already knew with central bank policy and the dovish monetary policy. I mean, how many times in the last 10 years, Tim, have I been critical of central banking policy, not because I disagreed with it, but simply because I disagreed with the timing of it, that you don't waste this ammunition on this type of scenarios. You save that ammunition to attack it when you need it. And so when you need these types of monetary policies, If the Fed had been hawkish for the last 10 years and they did what they did in the last 6 months, I would not be nearly as critical of the central bank in what they have done in the last 6 months if they hadn't been doing this for 12 consecutive years. It's just a matter of unmasking some of those problems. And so whereas people are now updating their oil projections post-pandemic, and they're using the pandemic as this moment in time that is shifting the way the world is seeing the fossil fuel industry versus renewable energy sources. People, that if that's a true statement, then people have not been they haven't been aware of these situations happening for the last 7 or 8 years. We've seen BP. I mean, BP, even before they released this updated projection on oil consumption, which sees peak oil consumption in the mid 20s versus the mid 40s, which is a dramatic shift from an oil consumption perspective put out by the energy companies. Before we even seen that, BP had already discussed removing upwards of 40% of their oil and gas operations, spending up to $5 billion a year in alternative energy research and R&D. So BP is basically putting their money where they think the market is moving, and this is on the backs not of the pandemic, guys. This is on the backs of what Wall Street has been doing over the last few years in terms of removing some of their investment capital from traditional energy companies, putting it into the ESG movement, putting it into the clean tech movement. And we've talked about this quite a bit on the halftime report, but when you look at what Larry Fink did in January of this year, before the pandemic, mind you, in January, Larry Fink, coming into this 2020 decade, said, we're going to remove our investments in traditional energy companies, and we're going to put $1 trillion over the next 10 years into renewable energy companies, the ESG movement. And so that was on the backs of Larry Fink and other Wall Street tycoons that run these hedge funds and massive institutions making these movements before the pandemic. And so with the pandemic, to me, I was already in the belief system and in that area of the market where I felt like oil consumption globally was going to peak in the 2020s. I believe that for quite some time now. Post-pandemic, I just think that is sped up. I think coming out of the pandemic, you're going to see a lot of Asian economies really, really aggressively move into clean tech. I think over the next 10 years, guys, you're going to see more infrastructure spending in the world over the next 10 years that would compete with what we've done in the last 100 years. I think that's how much money you're going to see from an infrastructure, but it's not just rehabbing the old infrastructure. I think you're going to see, Asian countries like Singapore and Malaysia and Thailand and, Hong Kong and so on and so forth, upgrade their infrastructure from a renewable perspective, a clean tech perspective. One of the reasons Tesla has been on fire, not just this year, that's a lot of the short capitulation, but I'm talking on fire over the last 5 years, is because of how much money these Asian countries are spending on clean tech, the ESG movement, and updating their digital infrastructure. And so I just believe we're gonna use the pandemic as an opportunity to really revolutionize our digital and physical infrastructure. And if there's ever a moment in time for us to go through that evolution, it is right now, when you need a lot of workers.
Marky, on following up on that, and I love the analysis there, Matt. I agree with everything you just said. I got a two-part question for you, Mark. Number one, what was your take on the report? Because I know you've been tracking oil for a very long time. And number two, I mean, BP, obviously this is a dividend-paying company. Oil companies are dividend-paying companies. We've seen the signals that maybe you're going to start seeing that reduced and lowered. Does it change your approach to how you even look at oil companies at all, considering these demand problems?
I mean, I've always, and not always, for many, many years now, lumped oil companies in with like other dividends because, yeah, price appreciation is nice and sometimes you get it and you can time and you can use technical analysis to help you out with that. But they've always, for me, just get lumped into this dividend category. And so they have to compete, and they really got to win now against other dividend companies in my head, because I think the BP report, listen, I think Matt's analysis, I don't have a lot to add to that. I thought it was spot on, but like they got to beat the other dividend type companies when you're looking at, if you're a dividend investor like Old Money Homes or myself, and have a section of your portfolio specifically for dividend companies.
Mm-hmm.
They got to match up, and I think they're not going to win any tiebreakers, right? Against a Southern, against a Pfizer, against an Altria, against Prudential Life Insurance. They're not going to win those tiebreakers because of that long term. Because when you invest, you're not swing trading. Like, I mean, it's so easy to get caught up in swing trading mentality or short-term trading when you're looking to invest. And so with an investment horizon of 5, 10, 15, 20 years, which a lot of people have, man, they're going to have to be really, really cheap, and you're going to have to feel really, really good about it for it to beat another dividend company, because the yield alone won't do it, right?
Mm-hmm.
Just because the yield is higher today on an oil company than perhaps another one of your preferred dividend companies, that's not going to be the tie-breaking vote, because those dividends are really, really concerning.
Mm-hmm.
So, and American Oil in particular, man, like it is just going to be, if BP is right on their demand forecast, and you play this out in your head over 5, 10, 15, 20 years, American oil companies are going to have a really, really, really rough time just because of the labor component. I mean, a lot of the expense of a company goes into that labor, and just quite frank, Russia and Saudi Arabia can find cheaper labor. They do find cheaper labor, which will be able to make profits at certain levels that American oil companies simply can't do. It's a tough time for American oil and the forward. American oil better hope BP is dead wrong on that.
Well, I don't think they are, though. That's the problem.
I don't think they are either.
And I think
None of us do.
None of us do. And I don't even think American Oil thinks that. You potentially could see a pivot out of companies like Exxon and whatnot. But let's stick with technicals here for just a second, Matt. As you were flashing through those charts, they're ugly. All of them are
Nasty.
ugly. I mean, crude oil is ugly,
Well,
and these other charts are ugly as well.
again, it goes in line with what I've been talking about the pandemic unmasking some of the problems in our society. ExxonMobil is a quality company. And this quality company, even before the pandemic, in a market environment that's been euphoric, was down 30% over the last 5 years.
Mm-hmm.
ExxonMobil, I mean, really, when we're talking about prices today, ExxonMobil, these prices were the prices back in 03 and 04 after the dot-com crisis and whatnot. So it's a terrible environment. These conversations that we're having over the last decade and what we will be having over the next 2 decades in terms of the evolution of energy and how we handle energy as a society are never easy. They're never easy. Companies will fall and certain companies will thrive. But it's those companies like British Petroleum today that accept the economic reality and start putting money into where it's going to be in the future. It's companies like that that will thrive in the new environment.
Mm-hmm.
And so, and I'm not saying ExxonMobil isn't doing it, because ExxonMobil is putting money into renewable energy and R&D as well. But these companies they're very, very difficult right now, because when we're talking societal shifts in how we consume energy products, the victors in those battles will be dominant for a century.
Mm-hmm.
They will be dominant. Think about the victors of the oil wars of the 19th century and how dominant they were over the 20th century. Think about that in those capacities. So I think it's a difficult environment right now in the energy space. It's probably a stay away from an investment perspective right now, and certainly from a trading perspective as well. But until we start to see clear victors there, this is going to be a difficult environment. I mean, even in a bullish marketplace, energy has been the worst performing sector, not for months, guys, but for years now.
Mm-hmm.
And so it's just a very difficult environment. And I just don't see how, I struggle seeing how ExxonMobil and some of these other energy companies, where really as of right now, the only investment thesis is, oh my goodness, they pay a dividend. Well, what happens when you start removing that component from it?
Well, and it's not like these are deep value stocks right here just because the charts are cheap. I mean, Mark, you're still paying a 25 PE
Oh,
ratio for
well,
ExxonMobil.
which is very high for
And
ExxonMobil.
absolutely.
Very high.
And this is one of the most difficult things from an investing standpoint new individuals have. Price does not equate to cheapness. It just doesn't. It just doesn't. Listen, if I only have, I think right now, one naked put on Marathon, which I rolled down and out in time last week. Like oil's going to have at some point it will appear attractive because you're like at some point you'll look at it and be like, oh my gosh, that's just such a ridiculous value. It's such a good gamble if nothing else. Even though it's at the bottom of the chart and even though it's cheap, normally a situation I'm all about. I mean, I just don't have any interest. And and if me a bottom scraping, man, I think that says something about the sentiment on oil right now.
This is
overall.
the second highest PE ratio you'd be paying for ExxonMobil in the last 15 years at the bottom of the chart.
Well,
That's
and
not good.
you better get ready to have that go even higher, even as the stock goes down,
Yeah.
because their revenues are going down.
Yeah.
So it's a nasty environment for ExxonMobil. And Jeremy asked a great question. For long-term holders of ExxonMobil, do you think they will go down with the oil ship? Yes, I believe there are some investors, Jeremy, that will go down with ExxonMobil regardless of what ExxonMobil's done, because that's an investment thesis for them. I don't believe ExxonMobil is going to go out of business, by the way, not in any capacity. I think ExxonMobil is a leader in this space, but I do think there is going to be some short-term pain in that. And ExxonMobil, eventually looking back 10 years from now, we might look at ExxonMobil being like, you know what, they figured out this puzzle, they figured out this riddle. And so no, I think ExxonMobil could be one of the winners in ultimately in this space. So but yes, I do believe that in the short term, meaning the last few years and the next few years, you'll continually see money come out of traditional energy and into more ESG environments. I think if there's one thing that I believe Wall Street believes more than anything, it's the ESG movement. They believe in that movement. They have put their money in that movement.
Well, and honestly, I believe there will be negative consequences to companies that don't believe in the movement. Part of that, Matt, is going to be societal pressure and stuff like that. You will get taken behind the woodshed, the old proverbial woodshed, if you don't get behind ESG. That's
well, it's like I was talking to my daughter a few years ago, and she was railing against these energy companies and how environmentally dangerous they are and doing that whole shtick, right? And I said to her at the time, I said, these companies that you're railing on are the companies that are going to push your movement. And she starts hating against that. And I'm like, and Wall Street, how much you hate Wall Street and these rich billionaires? Well, guess what? It's their money that's going to push what you want to see from a societal change. And she didn't understand how that all works, because it was just, I hate energy companies, they don't believe in what I believe in, and that whole thing. So I understand it, but the reality is, it is Wall Street that's going to push this movement, and Wall Street has backed the ESG movement, and they back the ESG movement because countries around the world are starting to back the ESG movement, and they're starting to put buku bucks in terms of fiscal policy towards updating their infrastructure. Wall Street is following nations out there. And now the energy companies are following where Wall Street is pushing their money. So it's a movement that's happening, and it's going to take some time for it to really kind of shake out.
Back on that crude light chart for just 1 second here, Matt, I love the discussion here, but really, I mean, I don't know where the downside support is, if at all, on crude itself. I mean, you've got just such an ugly chart. If it breaks down on that little shelf at $36, you've got lower prices definitely in store. And that monthly chart is one of the ugliest.
It's so ugly.
I mean, you're talking about a bear retracement pivot confirmation on a monthly long-term chart in the face of fundamental problems, a lack of conviction of the commodity. Mark.
Okay, hold on. I'm just going to flash through some charts on oil right now, okay? And I'm going to start with the longest time frame. You just tell me bullish or bearish, all right? Okay, monthly chart, bullish or bearish?
Bearish.
Mark?
Oh, yeah.
Okay, let's go down to the 10-year weekly chart. Bullish or bearish?
Bearish.
That's a nasty breakdown if it breaks the 20 weekly.
Ooh, it's ugly here. Let's go down to the daily time frame. Bullish or bearish?
Yeah,
It's
that thing's
bearish.
hideous.
That
That
one's low
right
base.
there is the scariest chart in the major markets right now. There are worse charts out there. That's the scariest one because of the lack of support underneath it.
There's just, if it does break, guys, I think, you know, oil, anything can happen on oil. And I know everybody hates those disclaimers, but they have to throw them out there because we get a lot of people that watch these types of things and they only get their 5-second clips or whatever. So anything can happen with oil. It's very, very, very news driven, very news driven, probably one of the more news driven type of financial instruments in the market. But if you break 36 here, 36.20 is kind of where I see the trigger, but 36, we'll just call it 36.
Mm-hmm.
There's really nothing until you get to 30 by 31.
Yeah, there's not much holding it up from there.
And then
Well,
there's really nothing if you break 30, there's really nothing until you get down to like 25 and then 20. It just, there's not a lot of support levels because again, in the oil recovery, I mean, it was snapback. It was a month and a half, just drove up and then it did nothing, which means once those are violated, that support, there's just no support there. And so to me, you know, I've talked about this with oil for a long time. I didn't care if it broke out bullish or broke down bearish. To me, that secondary trade was the trade that you should prepare for. And so, whereas a lot of people, including almost everybody at Tackle, missed this initial breakdown because, you know, it was sleeping, it broke down, people woke up to it. That secondary movement, watch that 9 EMA catch up to it. Watch that 9 EMA catch up to the price. Watch that 36 handle. If 36 is broken, to me, that's an easy trade to the downside to me. Now, again, anything can happen, but that's the trade that I think that most of the market has been waiting for, is that secondary technical pattern that really confirms a trend. An initial movement to the downside is not a trend starter. It's the first stage in a trend starter. You get a secondary break, you have a trend at that point. You have the confirmation of a trend, and it could have retraced back into 38 by $40. It didn't do that. It formed a low base instead. That low base is the second pattern, the same way a bearish retracement would be. So this secondary technical pattern we're seeing develop in the low base, I think is absolutely tradable.
yeah. Yeah, and if it breaks down, I mean, I don't know if it poses any market risk to stocks and equities, Mark. I mean, it depends on the sharpness of the breakdown and the catalyst, but for sure, right here on crude oil, I mean, you got to be watching that. If you're trading any energy companies, I know that it would pose some risk to those companies specifically, like the Exxons and whatnot. I love the analysis. Let's
in a
move.
different market, very quickly, in a different market that was not post-pandemic, oil breaking down would have a much bigger impact on the broader market. And we would be discussing the oil breakdown as an economic indicator, right? But this market hasn't been focused on oil for a long time.
Yeah. Yep. Let's take a look at gold if we can here, Maddie. And if you can break down that chart in the analysis, Mark, I'd appreciate it.
Yeah.
Listen, this is what, I mean, support, technical analysis is an amazing thing. If you do not understand or just new or inexperienced with technical analysis, it is a great time to start a trial membership at Tackle Trading. Just go to the store tab, sign up for a free trial, take technical analysis 101 and start developing that skill set. This support level on gold has been fabulous. Tested every week. It comes down and test it, and you know what happens? Bears lose again, bears lose again, bears lose again. And as long as that support level holds, price can only go sideways or up as long as support holds. And the more times you have a tested support area, it becomes more significant and more significant and more significant, to the point now that everybody can see it, right? Everybody can see it. Now we're looking for maybe a breakout for gold bulls, you know, breaking out an intraday resistance level. There's been a couple of them form. We don't have the same tried and true resistance level that we do the support level, but we got a couple peaks there, but the fundamentals of gold remain very, very strong. You could not have asked for a better outcome following the shakeout day from a month ago than what has occurred. I know everyone's like, well, I want it to V-shape. That's not healthy.
You don't
That's
want
not
everything
healthy.
in the world to V-shape, and V-shapes also have the other side of the V-shape mark.
Yeah, and it is not health, and because once again, we're not really big swing traders at tackle trading with gold. This is more investment, long-term positioned, and that's almost always where we give our analysis. And for that long-term health, this is the chart you really wanted to see develop, and it has. Where every week the price level bears have a chance to send it down lower, and what happens? Gets bought up, gets bought up, gets bought
Well,
up, gets bought up.
Now those support levels from an intraday are starting to increase a little bit, putting pressure on these resistance channels. When you're looking at the resistance channel here, and I'm gonna look at this on an hourly chart here, see if I can get a little bit more time frame. When you're looking at these resistance channels here and you connect the peaks, let me get the better drawing tool here, and you connect this peak here to this peak here to that peak there. Let me get that line drawn. You're kind of coming into those historical resistance levels, but what you're also seeing is those intraday levels of support increase. And so whereas, excuse me, whereas in the past, every time gold got hit back down, it came back down into the horizontal areas of support between 920 and 1900.
Mm-hmm.
Which also coincided in those moments in time, right where that 50 period moving average was. Well, as that 50 period moving average catches up a little bit slowly, those support levels from an intraday, let me kind of zone in here very quickly. Just give me a second. It's being a bugger for some reason. Let's narrow in. So as the 50-day moving average is catching up, now you're starting to see these intraday levels of support starting to increase as well. So whereas you had one at 1920, now the current one is right there at about 1945. You're putting a lot of pressure on that 1970 breakout, which would break out of that trend line that we just drew. It would also break out of the intraday resistance level. If you were aggressive, you could look to trigger above 1970 here. I still think the better setup, the confirmation of that next leg up is above 2000, a close above 2000. With the trigger above the pivot after the recovery right there at about 2020. But if you break out of that triangle, and triangles are not my favorite, I'll be the first to admit that, but if you break out of that triangle, that is technical confirmation from an aggressive trading perspective. Again, if this was a stock, I would probably say, hey, listen, you got everything you need. Let's front run, let's go. But with gold, I just think that slow moving gold, those breakouts can be very, very powerful in gold after sideways movements. I still think 2000 is kind of the level you're looking, but if you are aggressive, 1970 breaking that trend line could give you enough you need to justify moving in.
Mm-hmm.
No, and what I like, if it breaks that trend line, even if it doesn't take it that next leg higher, significant, it expands the range to the upside, right? It expands. But once again, this is literally, healthy price movement. Like when things go parabolic like gold did, 6-7 weeks ago, that's not health. It's not sustainable. And I know you get all caught up because people are throwing out gold 3000 and you're like, I got to do something. This is sustainable. This is healthy. And I love it. I love it.
The only concern I have this week in gold specifically is the last two times we've had major central bank movements in the last 6 weeks, from their last time they announced monetary policy to this time. The one was on the Fed minute day, and then the other one was on the Jackson Hole speech that Jay Powell gave, where he announced his average inflationary target of 2%. On both of those days, gold went down. And on both of those days, I said during the halftime report the following day, Wall Street got this one wrong. And so Wall Street's had a hard time. I don't know why. And I don't know why Jay Powell feels it's so necessary to basically come in and confirm everything he has said in the past. And I don't know why Jay Powell's having such a hard time, because I got Jay Powell as one of the biggest doves to ever lead the central bank. But every time he comes out and tries to disclaim everything he says, trying to find the best way to talk to the market, because he's having a hard time. He believes he's having a hard time getting the market to interpret Fed monetary policy. And so both times the market has misread the Fed, Jay Powell's came out and been like, "Whoa, like we're real big doves here, guys. What are we doing?" But the last two times gold went down on Fed announcement days, I thought it was a misinterpretation of what the Fed said. Gold recovered in the short term. So I do have a little bit of concern this week, given the fact that we don't just have the central bank of the United States. In that 24-hour time period between Wednesday and Thursday, you have the Bank of Japan, you have the Bank of London, and you have the FOMC. And so we have a lot of Fed news this week. Now, I'm just going to remove the drama from everybody here. They're not going to do anything. They're all going to say the same thing, and they're going to say that we're going to do what we stand prepared to do whatever it takes to support the stock market. They're going to say the economy, but what they mean is the stock market, because the stock market is their last thing in this house of cards. So we're going to do whatever we can to support the economy. They're going to say that, and then they're going to come back out on Thursday and be like, we really meant we're going to do anything we can to support the economy. And so that's what they're going to say. They're going to say the same thing they've been saying for weeks and weeks and weeks. The Fed isn't going to say anything this week, given the fact that they just changed their inflationary mandate. They're so tight against that, they're just going to reiterate their policy. But in those moments in time where they've had to reiterate their policy, the market has interpreted that a little wrong. And so those days, it does create some volatility for gold. And so yes, the 1970 trigger, the 2000 trigger stay intact, but I do think we got to kind of navigate the central banks this week as well.
Mm-hmm. Well, and I love the technical breakdown there because, obviously the triangle may not be your favorite map, but that is a nice little aggressive entry point. I'm with all you guys, though. I think
Well,
2000 is the place for clear confirmation.
Well, and again, triangles just aren't my favorite because of the way my mind works. When you break out of a triangle, don't get me wrong, I certainly see the increase in support and on an intraday perspective, showing a lot of bullish momentum going into the potential breakout. Just the way my mindset works, I'm so dominant on the left side of the chart that when you break out, I'm thinking, well, what about this pivot here? And what about that pivot there? Once you can reclaim those, when you break the horizontal pivots of resistance, I just personally believe those are much stronger, and they fit who I am better from a technician.
Yeah. Let's keep working through the markets here if we can. Obviously, we're talking commodities here. Quick peek at the dollar if you can here, Matt. There's always that inverse correlation assumption that we have between currencies and commodities. The FOMC meeting this week will have the dollar in focus. This has moved into more neutral here in the short term. In fact, what was our ranking on the Forex report this week? Was it negative 45 or where
Oh, it was on the 50.
No, we put it at the 50.
50-yard line. Yeah. And if you really look at that trend, I mean, it has kind of come back up. It's above the 9, the 20. We're in between two pivot points. Matt, what's your read on the dollar here?
I got the dollar as neutral right now, very similar to what we're seeing in gold. Obviously, the preceding trend was bearish. The preceding trend on gold was bullish. And so when you're looking at the dollar right now, and the reason, I kind of gave that 50 ranking there, which I don't like doing, but you really do have this neutral type capacity in the dollar where the two failed breakdowns that got gobbled back up played a role, obviously, but now you're sitting at a horizontal resistance level. And so you're looking at this horizontal resistance level right there at about 25.30. You got support right there at about 25, and then the bottom end of support right there at 24.80. I just felt like where we were given setting on those moving averages, kind of in the middle of that range between 25 and 25.30, I just kind of felt like we're looking for a breakout one way or the other at this point. And so for until the dollar truly does break out and reclaim that 25.30 level, I felt like some degree of neutrality was important in the analysis. And then it's like I didn't want to lean one way or the other because I truly am looking at a breakout K trade scenario here. And if the dollar does break out, although I don't believe it would play a role in oil, I think oil is kind of its own initial beast right now. it would play a role in the gold analysis, no doubt about that.
Mm-hmm. Mm-hmm. And obviously we'll wait on the Fed to see what happens, and it's got to break one way or the other for us to really, start diving into it. But I will tell you one chart that is holding up as well, Matt, Bitcoin real quick, if you can, holding that 10K mark. And I have a new rule. When we look at Bitcoin, we go to a weekly chart. I think the daily charts are, and I understand, I might be trying to talk a bias there because I don't want people to point out. No, it's just, it doesn't matter on the daily chart. The daily chart's ugly. The weekly chart looks good. So
I'll let you talk your book for a second.
Go ahead.
No. Convince me why I shouldn't look at Bitcoin on a daily.
Because I don't think traders of Bitcoin actually pay attention to the daily charts. I really don't. I mean, it rattles back and forth so much over the years. In fact, most people who approach Bitcoin, they're either hyper focused on day trading it, very, very short-term trading it, or they're longer term.
Bitcoin lovers focus on any time frame that gives them any hope.
Uh-huh. Well, give me a weekly then.
Go down to a 1 minute chart. I'll find you something.
It held 10K. I got to tell you that. Everybody knows my bias. I'm a bull on Bitcoin. I'm a believer.
You don't want to talk about the potential kiss of death that would form at 11K if you doji there.
Hold on, I got to go for a second. I'll be
right
back.
you don't want to see that, reversal pattern, breaking of support, that kiss of death in the short term. I get it. So let's look at it on a weekly chart here. The weekly.
Wow, that stopped on the dime at the falling 9. It's like almost algos like sold their Bitcoin there. So,
or it's up 390 points and it's just taking a break. One way or the other. I think you're in a moment in time here, though. I really do on the weekly chart. You got.
Hold on. No, we got to go back on something. I got to know how Mark's brain works. I really, this is going to be.
The only thing Mark cares about is the 9 EMA.
So Mark walked away for like 2 seconds.
You guys started talking about the dollar, and I'm like, I'm hungry.
No. I don't have any problem with it. I figured you were either going to go get some sardines out of the can or a Diet Pepsi.
I'm actually eating. I made some Southwest pasta.
Oh, okay.
It's really good, actually.
Very good. You come back, your eyes hit the screen, your eyes hit the chart, Matt, and technicians, we all do this. The very first thing you saw within a millisecond was the 9 EMA, and that was
the
not
9 EMA. Doesn't I listen?
That was not.
He loves his 9 EMA. He loves the 9 EMA. I should remove all moving averages from the Bitcoin chart because Bitcoin does not care about moving averages.
Mm-hmm. I see old resistance, new support, a pivot confirmation, higher highs, higher lows, and a developing uptrend. But the very first thing your brain saw was the 9 EMA. Is that because of your study, Mark?
I mean, listen.
That's just the way your brain works.
Well, the study I did, and a huge, massive data set. That first test of a moving average, it usually holds. So, I mean, and it's like a really, really high percentage. So it doesn't mean, so that first day, it's just like this profit taking. It's like it's a punch. But then unlike horizontal support and resistance, moving averages get weaker traditionally with every subsequent test. So you don't want, if you were like a Bitcoin bear right now, you wouldn't want that to be tested again tomorrow because the chances of it holding decrease with every subsequent test. So, hold today. But listen, I wouldn't be surprised to see Bitcoin at 25,000 in a year. I really, really, really think I just do. I think there's a blow off top.
Listen, I'm going to take a stance on Bitcoin right now.
Let's
I would be surprised to see Bitcoin at 25,000 or 3,000 in a year.
Or 2,500 yet. Yeah, that's right.
But from a technical perspective, I think you're kind of similar to the market. There are these moments in time that are very, very important for any tradable instrument. Mm-hmm. And when you see a violation of a daily chart while it simultaneously holds a support level on the weekly chart, this is one of those make or break moments for Bitcoin, in my opinion.
It really is. I agree with that 100%.
And so when you're looking at this on the weekly chart, you're seeing the potential retest of that 10,000, which is the old historical support range right there. It's one of those very, very, very important, significant whole numbers that I don't believe moving averages played that big of a role in Bitcoin. I don't think the analysis justifies it, but you're also kissing off the 20-day moving average there as well. That adds a little bit of support to it. You have a doji coming off last week after the sell-off the week before that. You have a doji last week showing slowing momentum at that 10,000 level of support. And now you have that increasing market. Whereas if you can get back up above 11,000 here, all the bears that were, celebrating that breakdown 2 weeks ago, all those bears are like, well, okay, that was short-lived. There's no reason to short it now. And so, whereas the bulls are now getting a little bit more ambitious above 11,000. So I think that 11,000 mark by 10,000 is really, really important in the short term. If you can confirm above 11,000, it removes the short case for Bitcoin in the short term, in my opinion. If it holds, the shorts are going to come in and they're going to celebrate a little bit. So I do think if you can reclaim 11,000 here, there's an opportunity to scream up to 12,000, in my opinion. So let's keep an eye on how this bullish retracement on the weekly chart shakes out this week. If again 11,000, if you get back above that level, it has acted as a resistance level in the past. That removes the short-term shorting opportunity, and so that gives the bullish case a little bit more. But to me, this is going to be an important week for Bitcoin.
No, I mean, we really do have massive technical battles in the in major markets, or significant trading instruments everywhere. I mean, obviously the broad market and the S&P 500, major technical battle. Bitcoin, support levels on silver and gold that likely will be tested and hold. The oil chart. I mean, this is a massive technical week of battles right now. I mean, we don't have. I mean, it's fascinating theater. I mean, as people that
Mark,
love this market.
You've said many times about how much you love this market. There's no more important time for me personally in terms of just enjoying the market than when these battles take place.
Yeah, this is
where the real analysis takes place.
Mm-hmm.
When you see something break out and everybody in the world jumps on it, that's fantastic. You love it as a trader. You just trade that momentum. But these moments in time are some of the bigger opportunities that you have, because you're getting into in the first stages of that momentum. And I'm not a Bitcoin guy. I mean, that's been well documented in the last few years. But I love the theater that is happening in Bitcoin, and I still believe the ultimate breakout of 14,000 is the strongest one. But I got to be honest, if 10,000 holds and you do reclaim 11,000, you got to call this confirmation. And removing that short term, just seeing it as somebody who does like to trade bearish, and seeing that potential pattern develop at 11,000. If that pattern doesn't develop and it actually breaks out of 11,000, I'll just tell you, as somebody who does like to short, there's no way I would look at a short on Bitcoin at that point. And if there's no way somebody who likes to short would look at a short at that point, you got to think the bullish case is pretty strong.
Mm-hmm.
Yeah.
Mm-hmm.
Now, pretty soon you'll be calling it the new gold, Matt.
That will never
doubt
happen.
it. I doubt it. Watching these technical battles is like watching a close football game instead of a blowout. Obviously,
yeah, sure,
back
absolutely.
and forth of a close football game to see who wins, and usually the Cowboys lose at the end. So that will
listen. And I have my plan. I'm sure you two have your plan. And everyone out there, like when they have these technical battles, what is the signal that you're waiting for? And I'm not just talking Bitcoin. I'm talking it all: crude oil, gold, silver, broad markets. What's the signal that's your confirmation signal? And then what are the actions? Have that planned out before it happens, both ways, bullish and bearish. If you get the bullish confirmation signal in this battle, what is that signal? And what are you going to do about it? It's the bearish signal. What is that signal? What are you going to do? Have it planned out. As this battle goes on, enjoy the theater, but have your signal and what you're going to do when that occurs.
Keep an eye right here. 10,800 short term, a lot of momentum. You're starting to form a little bit of a high base here. For those Bitcoin lovers, keep an eye on 10,800 in the short term, ultimately 11,000 for a weekly confirmation perspective.
Yep. Let's talk companies here, guys. As we're going through our show, as always, if you're out there watching our show, we appreciate you guys. About a month ago, we had a big celebration when we hit our 10,000 subscriber mark, and now we're up at 11,000. So welcome to
Team
all
Tackle.
new
You
members,
guys are the best. We love you. You guys are awesome. Thanks for showing up on a daily basis and hanging out with us. We really, really do appreciate it.
And one thing that always gives me a little bit of joy here, every once a week or 2 weeks or so, I'll ask for this, guys. So if you're out there watching the show right now, just pop in where you're watching from, what city, what state, what country. We've got a global
Tim,
audience, and it's kind of fun to see that.
I honestly, I just really do enjoy every day having the opportunity to hang out with our tribe every day.
Yeah, me too.
I love it. I love being able to come on a daily basis and see the comments and hang out with our team and break down the markets and tackle trading. I mean, everybody at tackle trading, you guys are awesome. We love you guys.
Yep. Yeah, I definitely love the tribe, love the team. In fact, there was a little hashtag I saw somebody do last week, like tribe something. Was it
No,
what?
trading tribe.
Trading tribe. That was kind of cool as well. Let's talk some companies here, Matt, as we work through the rest of our show. Probably the one we got to start with here is Oracle. I think we've been discussing this TikTok bid and ongoing conversation between the Trump administration and ByteDance, the parent company, saying something has to happen here. You guys have to sell it. By the way, it did get confirmed by Mnuchin that the deadline was not September
It's
the
the
15th.
20th.
It was the 20th by
It's the
executive
20th.
order, by the way. So obviously they had that date wrong there for just a second, but it sounds
Oh,
like Matt,
they did, like everybody in the market did.
everybody did.
Everybody in the market was reporting the 15th, and like Mnuchin is screaming at the top of his line, "It's the 20th! It's
Yep.
the 20th!" That makes me believe that Mnuchin really, really wants to support this deal.
It sounds like they want to get a deal done from that
Now,
perspective.
Mnuchin wanting to support the deal and Trump signing off on the deal are two different discussions. Trump hasn't signed off on it yet.
Well,
Well, you can all you want, but
this is
the
his
Chinese
buddy though.
government, the Chinese government hasn't signed off on the deal.
That's the wrench I'm wondering about. I don't know if the actual
Oh,
you get
the
regulatory
Chinese are going to
approval from
sign
the
off. Are you
Chinese.
kidding me? If the Chinese get to have their cake and eat it too here, whereas they don't actually have to sell TikTok, and they can instead just do some weird partnering with TikTok. I mean, that's a little different than what we were expecting here. We were expecting a sell of US operations on TikTok. That's what Microsoft had put in a bid to have. TikTok ByteDance rejected the Microsoft offer yesterday, which was a sell offer. And now we're talking about partnering with Larry Ellison, whereas ByteDance in China would still have some type of, corporate ownership there. Does that violate the executive order? I think there's some open questions here, but ultimately, if Trump does sign off on this deal and it is a partnership deal, I think the number one thing you can take away from that is this would be a de-escalation of the Chinese-U.S. Conversations we've been having from a geopolitical perspective, and that's probably what China's trying to do here. Is they're trying to throw a little bit of a bone, saying we'll partner, let's de-escalate the situation. And if Trump signs off on a partnership versus a sell, I think that would signal a de-escalation of the rhetoric we've had recently.
Mm-hmm. There's a lot that we don't know yet about this deal, in terms of will the algorithm still
we
be
know
a
one
part
thing.
of TikTok and all that kind of stuff. Go ahead.
We know one thing. Microsoft and Bill Gates are crying in their cereal today a little bit.
Dude, I mean, I got to bring it up. I mean, is it the Larry Ellison factor?
Bring it up.
I think I kind of have to.
Do you have to bring it up?
ByteDance didn't even acknowledge Microsoft's bid. Microsoft just came out with a press release yesterday and said, "Listen, we're pulling out. It's not going to happen."
Anybody thinks, and I'm not saying anything about Trump here. This is presidential politics 101.
Mm-hmm.
Larry Ellison, he's a little bit more friendly with Trump than Bill Gates is. And if you don't think that isn't playing a role in China's, mentality here, I'm not even talking about Trump. I'm talking about China choosing. I'm saying ByteDance is trying to, through ByteDance, is trying to de-escalate this situation. And I promise you, it played a role in choosing Larry Ellison over Bill Gates here.
Mm-hmm. Yeah, and Microsoft actually still holding support here. It hasn't affected the stock price.
How does Microsoft? Talking about Microsoft really hasn't done anything since the news of the potential acquisition. When you look at the potential news of the acquisition, it was right here. It was 204. Okay.
Mm-hmm.
Well, now what is it when the news comes out? It's 204. So what's Microsoft supposed to do? Just sell aggressively because they didn't hypothetically get a deal when they were at the current price at that point? No, I don't see this as a negative for Microsoft. You see it more as a positive for Oracle, but I don't see it as a negative for Microsoft.
Mm-hmm, mm-hmm. Marky, what was your reaction to the news here? Obviously, with Oracle, at least in preliminary talks, becoming it. And here's the exact title, Matt: the trusted tech partner of
Trusted
ByteDance.
tech
I
The
mean,
partner.
trusted
whatever that
tech partner.
means.
That's
Yeah.
so cute.
I
That's
mean,
so cute. Oh, that's so cute.
let's assume. Okay, first of all, the deal's not done till the deal's done, right?
Yep.
So there's that hanging over any play on Oracle itself. And what that means, so let's say they become the trusted tech partner. I mean, that's probably something good, right? I mean, Oracle's a good company that makes money, little on the boring side of price movement, but they make money. And they had a pretty good, in my opinion, earnings report that just came out late last week. So we don't know what it means, but it's probably good. Like it's really hard to analyze the significance. We know TikTok is an amazing brand, right? I mean, just an amazing brand. My daughter was doing a TikTok video of the cat this morning. It's in the kids' conscience. It's likely here to stay, and likely to continue to increase market share in that very valued social media space amongst young people. So
Mhm.
being the trusted partner is not a bad thing, right? There's no way Oracle's not going to make a buck or two. How significant it is, I don't know. One thing that does interest me in this whole thing, following a gap up earnings report that did sell off, following this news that's selling off a little bit, if we go to a long-term weekly chart here, I mean, Oracle's been trading in this really weird, it's not a clean pattern, but I mean, you don't have any resistance to the upside here. And so if it can find stability here in the coming days, form some kind of support level, find some kind of short-term trading range, and then you have a clear technical signal, there's something really interesting here from a trading point of view. From an investing point of view, I mean, Oracle's going to be Oracle regardless if they get TikTok or not. I mean, good, boring, solid company that makes some money, right? But from a trading technical point of view, man, a really nice pattern could develop here with nothing to the upside. And that's usually been very, very positive in 2020. So really, I mean, this is really at the top of my list of watching a developing trading pattern occur here. It's really choppy, really messy right now, right? But that can smooth out in the coming days. And I'd like to see that pattern develop. And yeah, I have a lot of interest in trading it. Investing point of view, I mean, I don't know how much it means because, I mean, who knows what trusted partner means, right? So,
Well, even
I
without the
know what it
TikTok
means.
deal, go ahead, Matt.
It means absolutely nothing besides just putting one fancy word in front of something that doesn't change the dynamic of absolutely anything, but tries to spark emotional conversations about it.
Mm-hmm. The trusted tech
The
partner of
Great
ByteDance.
Recession.
Yeah.
Your job was just lost, but it's great.
I mean, Oracle's a steady company. There's nothing. They have fine fundamentals.
they're
17
steady.
P/E
That's a great
ratio.
word for Oracle, right?
Their
Steady.
revenues are always consistent. They've had share buyback programs for years. It's amazing. I just don't have interest in this
I am
company too
far
much.
more interested in Nvidia buying ARM
Yeah.
from SoftBank today for 40 bill than I am Oracle and TikTok, honestly.
Yeah. And that was another
Now,
bit.
if Microsoft would have got TikTok, I would have had a different conversation there.
I think I'm the most bullish of the three of us then on this potentially for Oracle.
Well, maybe, but you also like boring
I
companies.
do,
like
right?
Oracle.
Like, hey,
I mean,
listen,
that's kind of your thing.
this is like a boring omelet in which TikTok's kind of like that little bit of Tabasco
Mark
sauce
got
you
his
throw on,
omelet
right?
with just eggs in it.
Yeah, and then you
All
get a
he
little
got.
Tabasco sauce on it,
I
yeah,
wanted
that's what
some
Oracle feels to
mushrooms
me.
and some green chilies and some ham and some cheese. Let's make it saucy. Let's get it sexy in here.
Mhm.
No, Oracle's a great company. There's nothing wrong with Oracle. It's a very stable, very consistent company. I just hadn't wrapped my head around Oracle getting this deal on TikTok more than I had on Microsoft. But obviously, I think anybody who does get TikTok, that they're going to be a winner here long term.
Yeah.
I think TikTok could represent tremendous revenue streams, 5, 7, 10 years from now.
Yeah, it's been a long time, but I think I'm going to stick Oracle obviously on a watch list. Got to keep track of it now, Mark, and at least see what happens as we get more details around the deal. And it is a messy long-term chart. It's going to need some time
Oh, it
to
is.
cook. Yeah.
But you're still breaking out of the all-time high here on Oracle. You're kissing on that $60 level. So I think it's messy in the short term, given all the random rumors and news we've seen over the last 3-4 weeks. But keep an eye on Oracle above $60 here.
Yep.
If it can hold 60, you're gonna have some opportunity there.
Mm-hmm. Yeah, and I think that's exactly the right approach, Marky. Even after you talk about how you keep a list of like 100 or 200 companies all the time. Is Oracle on that list now?
It was not, and it got on there today.
Made the list.
It got on Mark's 200.
Is it a 200? 100? Yeah.
So I need to know, like, when you add a stock to your Mark's 100 list, do you remove it, or do you like
something gets bumped?
Does something
gets bumped?
Oh, I got a great idea. One day on a podcast, we're gonna have to go through Mark's 100 list. I want to hear the logic behind these companies.
The amount of games you and I could like what company?
Here, I want you. Let's just play a short game. 4 companies. You each get a guess. Are they on the 100? Go.
Okay. I'll go first. Pfizer.
Yes, of course, Pfizer is.
Yeah.
Altria.
Yes, of course, Altria is.
DraftKings.
Of course, DraftKings is.
Penn
is, yes.
4 for 4.
Yeah, there you go.
There.
Okay, we're good.
What's a notable name that's not on the list?
So basically, gambling growth and
dividends.
Value.
Oh,
dividend.
listen.
Right.
My list gives a good indication of who I am.
Okay. We're on some there, right? Though. I mean, like it's dominated by value dividend payers.
No, it's a little bit. What I like in my 100 list is I like a little bit of everything, right? I don't want like all tech. I don't want all epicenter stocks, and I don't want all. I want a handful of dividends and a handful of growth and a handful of tech and a handful of and then I really like anomaly stocks.
Oh, I like this game. Team Tackle, put in a stock you think's on Mark's list, and Tim and I will agree or disagree. MGM, absolutely on the list.
MGM's on the list. Yeah.
MGM, absolutely on the list.
Yes, it is. No, but I love anomaly stocks, like things that are different than everything. For example, Beyond Meat is on my 100 list because Beyond Meat is really kind of its own thing, right? And so I love anomaly stocks.
Mm-hmm.
Well, you'll love Beyond Meat's news today. They're coming out with like vegetarian meatballs.
Oh, you stole my thunder, bro. Vegetarian meatballs in the freezer coming next to you.
That's your thing.
I would do some veggie meatballs.
Absolutely, right? Like you make some spaghetti and like, add some
GBTC. Yes, GBTC.
Yeah,
yes, DraftKings. Yes, Boeing. Oh, that's an interesting. Does Mark tracks Boeing? Mark has to track Boeing.
Yeah, I could put on Boeing right now.
Microsoft, absolutely 100. Not Microsoft, but Micron. Yeah, definitely Micron.
Yeah, Micron is.
This is an interesting one. Cinemark.
Cinemark, yes.
I got more.
He has naked puts on Cinemark.
I got more naked puts on Cinemark than I got any other individual company shooting. Right? So.
Mm-hmm.
Yeah.
Well, by the way, theater releases.
The only thing I care about is what stock did you remove from the Mark 100?
To make room for Oracle.
Yeah.
I removed Neo.
Neo getting the cut.
Yeah, I already follow, in the electrical vehicle space, I got 3 companies on there. I had 4, I follow Workhorse, I follow Tesla, of course, and I follow that company that
Nikola.
I lost $250 on a naked put last week, Nikola. So, that's the one thing. You got a naked put on something and it starts free falling, your fundamental conviction in it will be tested really, really quick.
Especially on a company like Nikola. No doubt.
And mine came up lacking.
I kind of like Neo here. I kind of like it. I kind of like it above 1850.
Pattern.
Oh, that's a good pattern.
Yeah,
that's a good pattern.
Yeah. I think Team Tackle knows you very well, Mark. Southern.
Docu. Yeah, Docu.
Docu is not on my list.
Oh, you don't have Docu?
I do not. I got because once again I like to have a basket, so I'm not going to have a lot of stay-at-home stocks or
definitely Riot though. Definitely Riot's on there.
Okay, I have more naked puts on Riot than I do on Cinemark. Now that I think about it,
McDonald's has to be on there.
McDonald's isn't on there right now.
How do you not have McDonald's?
I've had it on. It's in the back, waiting for a call up.
Because they don't sell the McRib right now.
you
When
know,
the McRib comes back, he'll put it back on.
like, no, the only restaurant type things I have on there right now is QSR, Starbucks, and Wendy's. Oh, and Cheesecake Factory. So I actually, I have a lot of fast foodish, restaurant-y type stuff on there. And I just don't want to, like I want a little sampling of a lot of different industries, right? So that's how I build my 100 list.
Match.com.
Jeez, are you kidding? I've given those people so much money over the last 3 years. Of course they're on my list,
Lumber Liquidators. Last one. Jeremy's got Lumber Liquidators.
It is not on my list.
Did not make it. Dude, this is fascinating. I need regular updates on what companies get the list when they're added to it and which ones get cut.
Are you kidding me? I'm thinking like a monthly webinar where Mark goes through the Mark 100 list just to update the Mark 100. This is a thing here.
I think it's fascinating.
I'm more fascinating in this conversation. I don't want to talk about Nvidia buying out ARM. I don't want to talk about Amazon hiring another 100,000 people. I don't want to talk about Delta securing a $6.5 billion loan backed on their frequent flyer program. Delta's fully embracing credit card mechanics as every other airline is. I want to talk about Mark's 100. I'm fascinated by this.
Me too. I think we should probably do a podcast on it and actually go through all of them.
I mean, we could like psychoanalyze this and like include Mark's analysis and psychology. I mean, we could make this a thing.
Dude, it's fascinating. I agree. In fact,
dude, and having a watch list is a fun thing, right? Like, oh, yeah. Like for example, a company that I would have never thought at the start of the year would have been on there that's on there now is Smith & Wesson. Like I didn't really have any interest in tracking Smith & Wesson or this and that, but all of a sudden, I started to see the FBI reports that like, there were more background checks and record levels. I was like, man, I gotta track this. Gotta have little guns, right, man?
No, Damon, Mark 100 is not on the site anywhere, but that is what I'm thinking about. But that's a conversation
and it's just a
Mark.
watch list. It's not a like, oh my gosh, these are the 100 companies I love. It's the 100 companies that I find most interesting right
fascinating.
now.
Because you don't love Beyond Meat, but Beyond Meat.
No, I hate. I mean, listen. I've
Meat.
sold. I'm a net loser on Beyond Meat because I've tried to short it so many times. So Beyond Meat's existence has cost me money, but I'm gonna get that money back eventually. I'm just waiting for my spot.
A night. Hold on, Dina's onto something. A night with the naked trader. Some wine with Mark on a Friday evening.
Listen, you don't want to see drunk Mark.
Oh, the hell we don't. Drunk Mark's the funnest, Mark.
He gets listen, I was drinking the other night, and that One Republic song, When the Love Runs Out?
No, One Republic. No.
Like, I've checked out of this conversation already.
Oh, anyways, I'm doing a parody song on it, When the Trend Runs Out, for the breakdown. So anyways, I'm working on that. That's what I do when I get drunk.
That is not on my playlist. I will tell you that, but
it is a good song, dude.
I'm sure it is. I'm sure it is. All right. Let's keep working through some stock news here, guys. Even though it is not as interesting, Matt, we are going to bring up the Nvidia news. Nvidia did purchase the ARM division from SoftBank, I believe, in their semiconductor division, but it wasn't a complete purchase though, was it, Matt? I mean, it was some kind of mix of cash and stock or something.
No, like it allowed basically, and SoftBank, guys, is becoming one of the major, if not, I don't even want to say becoming, they are one of the major players in the market, no doubt about that. SoftBank about 5 years ago purchased ARM Holdings, and I believe they purchased it for like $32 billion or $35 billion. I can't remember what it was. ARM Holdings is the chip division for SoftBank, is what it is. And so SoftBank today is selling ARM Holdings to Nvidia for $40 billion in cash and stock offering. The cash is $12 billion in cash, $28 billion in stock offering. And so even though SoftBank is selling it to selling ARM, which is their semiconductor part of their holdings, to Nvidia and giving Nvidia a major force in this space, Nvidia, obviously a company we like, company that's going to be on many lists moving forward. But Nvidia is now a dominant player here. SoftBank gets a little bit of gets their cake and eat it too here. They get the sale of the of ARM Holdings, but they also get in conjunction. They're holding $28 billion worth of stock now in Nvidia. So it's a little bit of a more of a partnership deal than it is just a standard acquisition. And so it's in my opinion, very positive for the space, very positive for Nvidia, even though we're seeing a little bit of a sell here. Nvidia has just been up so much in recent history. I mean, just fascinating. What's going to be interesting is watching the other players in this space over the next few months. Because once a company like Nvidia does this, and there's a lot of competition between Intel, Nvidia, Oracle, AMD, Micron, and all those semiconductor companies, Taiwan Semiconductor as well. It's going to be interesting to see this kind of acquisition battle forming, because when one company does that, look for the other companies to look for other target partners as well.
Yeah.
Oh,
What do you think of the
Bradley,
chart?
I'm with you. Nvidia is a beast. It's an amazing company.
What do you think of the chart here, Matt?
I think the chart's very volatile, but no different than what we've been seeing over the course of the last, little bit in the marketplace. I like Nvidia, even though it's sold off with the marketplace. I really like that it held the channel between the 20 and the 50-day moving average here. It really hasn't even tested that low point on the sell-off down here at about 467. And then last Thursday and Friday, as the market was coming back down into support, it actually formed a higher level of support as you're trying to break back up above that resistance, selling at 425. I think a close above 425 is confirmation here.
Yeah, that's kind of what I'm looking at as well. And obviously a continuation of that longer term uptrend. And you had that beautiful earnings report, that blow off top, get back above those levels. I think you got something there. Let's keep talking
Well,
here.
and coincide that with the market confirming as well. But Nvidia, if the market does confirm, Nvidia is a company you should look at, in my opinion.
Yep. Nicola next, if you can hear Maddie. Mark, you brought up Nicola. It's on your 100 list, I believe. Is that right?
I love the weekly chart on Nvidia, by the way.
Oh yeah, that's clean. That's a lot cleaner than the daily even. Yeah.
Oh yeah. The breakout there would be strong on the weekly chart. Just keep an eye on it. That's all.
I like it.
In terms of Nicola,
and I think Nicola is on Mark's 100 list, I believe. Is that right, Mark? On your
It
list?
is absolutely.
Yep.
I love. How do you not have a spot on your 100 list for a company that's never made a sell but has a market cap of like $20 billion or something, right? I mean, that just deserves a spot because it's interesting. So we have the short seller report that came out last week that said basically, hey, Nicola doesn't have any technology. They rolled cars down hills in order to give the illusion that they actually work. It's a fraud. It's a mess. They compared it to Theranos. I believe that is, remember that biotech company with.
Oh,
yeah.
The woman who looks like Mark Zuckerberg.
Yeah, I know the Theranos
thought
that was a complete fraud, and they compared it to that, and that like
now you can't stop seeing it, right?
I cannot unsee that now.
Now you can't stop seeing it.
I mean, I never thought about she's the female Zuck. That
She's
is
the
so
female
true.
Zuck.
They could be.
She looks like they look like brother and sister.
Yeah. What was her name? I gotta look it up.
Oh.
Go ahead, Marky.
No, and so whenever anybody, especially on a company like Nicola, because nobody really knows what Nicola is. We all know they have like an
time out. I apologize. I hate cutting out people off like that, but I
told you he's stuck.
I gotta get a picture.
I knew he was stuck. I knew I got him.
Of Elizabeth Holmes on this screen right now.
Listen, and there's no mercy. I'm sorry. When you defraud investors and defraud real life people and are a complete fraud, you get no mercy, Elizabeth Holmes.
Oh no, we don't care what your lawyers are claiming in terms of mental disorders.
No, you get no mercy. Yeah,
you defrauded billions of dollars, Elizabeth.
Dude, I need a side-by-side on Twitter with Elizabeth Holmes and Zuck, and I just need to have a poll.
I'm telling you, they're siblings.
You cannot unsee this once you see it, Matt. I have never ever thought about that.
I'm telling you, I would love to give somebody who did it on Twitter, but they posted a picture and they're like, does anybody else see Zuckerberg? And I'm like, oh, Lord Almighty, I can't stop seeing it. Like, it's once you see it, you can't stop seeing that. But Mark, This reminds me of that battle that Ackman had between Icon and other billionaire hedge fund investors of the company Herbalife, where you had that public battle between the company with its institutional investors and Ackman, who is the famous short individual off Herbalife. I don't know. Nikola doesn't have vehicles. Everybody knows this.
Yeah.
Everybody knows they don't have a functional vehicle. Even GM said we're talking 2-3 years from now, maybe 4 years from now. It's a concept that they're going to put into production. So how can you claim? And I guess this is where I struggle with it. And I've always felt like ever since the deal with GM was announced, it was better for GM than it was for Nikola. But for me, how do you call a concept a Ponzi scheme? You're investing in an idea of something.
Listen, and once again, I've read some of the report, and I've seen all the highlights. I've seen the Wedbush, an analyst came out. Basically, for me, this whole thing comes down to a simple binary decision. It really does at this point. Either GM did their due diligence or they did not. And so for me, the Nikola investing thesis has become really, really simple. Did GM do, because you could debate the others all day. It is a who is the best superhero argument, blah, 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 because you're debating a concept, right? You're debating something. Did GM do their due diligence in taking their stake in Nikola, or did they not do their due diligence? And for me, at some price level, I'm going to bet that they did. Now that price level is really, really, really low, right?
Mm-hmm.
But you know, that's what my entire Nikola, and will be until I see some evidence of sales and product and this. Did GM do their due diligence or not? And I really think the Nikola argument comes down to that simple binary decision, and that's up for every individual.
It's simple to me. It's really simple to me. And again, I'm not speaking as a Nikola guy, but did anybody in the market think Nikola was already making vehicle sales?
No, I don't think this is not new
Nikola's
information.
been pretty open about them not selling any vehicles. Like everybody knows this company has no revenue, and they weren't even going to go into production until next year or the year after. So how is this hedge fund comparing it to a Ponzi scheme when Nikola, everybody knows, doesn't have any vehicle sales? This is a concept. GM's buying the intellectual property and the hypothetical brand image. They're not buying a Ford production. They're not buying the assembly line here. They're buying the hypothetical construct of an idea put into production. That's what they're buying. So how is that? And don't get me wrong, I can see the hedge fund being like, this company doesn't make sales, this is a Ponzi scheme, this is nonsense, this is BS, but that's not what's happening here. If Nikola was saying, hey, listen, we have these trucks, and in reality, they were, letting these trucks roll downhill, I mean, fine, one thing, but they haven't been making sales. Everybody knows they haven't been making sales.
The GM part of it is more interesting to me from a trading perspective, by the way. I mean, we were looking at the charts earlier, and I believe a company like GM would probably do their due diligence, Mark, on a $2 billion deal. I like this chart here, guys. I think
this feels to me like a hedge fund speaking their book, and they've been getting their ass handed because they've been short for a long time.
Yeah.
This feels like now they're making it public to push price lower, and say what you will, but and again, I don't have a horse in this race. I'm not a Nikola guy, and I don't even know what hedge fund was doing this, but it just feels to me like this is somebody speaking their book to try to drive price down.
And the fundamental evaluation of Nikola is a completely different discussion, obviously. I mean, just because we see it that way doesn't mean we like or don't like Nikola as an investment. But I agree with that, Matt. I agree with that perspective. I do think that they were just kind of talking their book.
Well, and again, I'm not saying believe in the company, don't believe in the company, invest in the company, short the company. That is not what I'm talking about. But to sit there and to watch this play out from afar, watching this hedge fund go all short mechanic and ultra bear on this company, when everybody in the world, ever since the price went skyrocketing, went right back down, everybody knew there was no revenue here. This was a concept put into motion.
Yeah, it's not like, I mean, the analogy with Theranos, I think, is completely off, because Theranos, you thought there was something in, not
They
just
had
in
cooked
motion.
the books, Mark.
They had fraudulently cooked the books to make it appear.
They did Enron. Theranos went all
Matt,
Enron.
You know, and I know, and Tim know, we all know with 100% accuracy that Nikola has zero revenue. There is no accounting
revenue.
fraud. Zero. This is, Matt, I think you nailed it too.
Here's my accounting right here. I have no revenue. I have debt. Do you want it? Where's the argument on fraud here?
Listen, I think it really is. I think, listen, you convinced me to, yeah. No.
I am not trying to convince you to sell more naked puts and leverage.
Oh, that ship has sold the building, my friend.
No, I geek out on these types of court cases, as you guys know. I don't see the argument here. I think this is a very faulty argument.
I think you made it great. Like, seriously, that, I mean, and this is why a community and a team is important. And I mean, and seriously, like, you know, I'm going to pitch Tackle Trading hard here. If you are not a member of Tackle Trading, being part of a community, because trading is this isolated, you're on an island and you think through things. And I like to think, listen, I'm a vain individual. I like to think I'm a smart guy. And I definitely spent a lot of freaking time doing this. It's like thinking about the merits of Nikola, right? But like, it didn't occur to me what Matt just said about, you know, this was a known theme. There's nothing new here. And guess what? That little tidbit is like one of many, many things that being a part of a community is about in our classes. So not only do we do education at Tackle Trading, you know, not only do we have tons of recorded videos and courses for you to take and have great classes. It is about a community. It is a sharing. It's learning. It's bouncing ideas off. It's about coaches going and gathering what they think the best trade setups are for the week and sharing them in our stock and scouting reports. Seriously, come be part of our community. It's a bunch of awesome people. Like, we're just a smidgen of this amazing community that you see on the halftime report every day.
Listen, unless they hit debt, I watched Margin Call last night, so I'm all on that. But unless they hit debt, which is damn near impossible to do because you have other parties to the debt, I don't know how you make the argument that this is even remotely similar to a Ponzi scheme, or how this is remotely similar to the Theranos or the Enron scenarios or the Tyco scenarios where you had fraudulent behavior from an accounting perspective. You can't make those same arguments. You can't. You can't even make the same argument that Bill Ackman made against Herbalife, that it was basically a pyramid scheme based on the the multi-level marketing that Herbalife did. There's no argument here because there's no revenue here.
Well, and even GM came out and said it's going to be like 2 or 3 years before we get these trucks on the market. It's not like they're promising they're going to have revenue even immediately anyway,
No,
Matt.
GM's buying the hypothetical concept put into production that they're going to figure it out. Because guess what, guys? If Nikola had already had revenue, and if Nikola had already had a vehicle that was ready for market, I promise you GM would have had to pay a hell of a lot more money than they did. GM paid the small price, and it's not a small price when you think in terms of billions, but think what Tesla, to buy out Tesla today, you'd have to put up a $1.5 trillion thing.
I mean, the more you think about this, I just am going to bet on GM's due diligence. I mean, they got people that know cars, right? They have people that know the technology in cars, and they had to have seen something in the concepts or the proprietary things that maybe we don't even know about, right? Because Nikola's not going to say, hey, here's the blueprint for all of the technology we have in development. Here, let's open source it on the web.
Here it is. It's very simple. Nikola, we have a strong concept that we think it played out is going to be very, very good for society.
Listen,
GM, we have a strong assembly line and a marketing machine that can put your production into our assembly line and put it out for mass production. Oh, you have that. We have the concept. Oh, let's make a partnership. Where's the Ponzi scheme there?
Yeah, no.
Now it may not work out.
It may not work out. That's a whole different question, right? Yeah, I think this short seller report is not going to stand.
It's a
the
hit
test of
piece
time.
is what it is.
I think the more you think about this from just a big picture, taking out the individual arguments, but from a big picture, this feels, I don't think it's going to stand the test of time very well.
Well, and I didn't even think about that, battery design, right? Like, again, I don't see it. Maybe we need to let it play out and things will transpire that we don't know. But as the things we do know from a public perspective, the hedge fund is wrong here. Now they might be right ultimately that the concept doesn't prove out, but they are wrong here in terms of it being.
You've convinced me, Matt. I have fundamental conviction on Nikola at $5. I now have that level of fun. You've convinced me. I now have it now. So.
Can I just declare victory and take my people and go home on this one?
So, no,
yeah, Matt, that you were at your finest there. Like,
although I do find it funny that you use the phrase fundamental conviction after a 15-minute conversation. So, I mean, I'm not sure you do have fundamental conviction.
He has naked puts on it, of course. Like right now, $5 strike. He's raring to go.
Oh, I ain't gonna go buy shares outright right now. Are you kidding? Come on.
No. Listen, when Mark talks about fundamental conviction and he's selling a 5 delta, you have him on.
Okay, let me rephrase. I'm willing to lose a few $1,000s at $5 as my entry point. How about that?
It's tough to trade these types of stocks that are in the news all the time, right?
Oh my God! But they're interesting. Yeah. That's why
they are fascinating. But I'm gonna ask you guys a question. I kind of like what I'm seeing here on GM in the short term. I like the bounce off the 20.
That's a nice trading pattern.
I like the gap fill with the upward movement in price. Nice little Harami hammer candle from Friday. The continuation here today. Volume hasn't supported the bounce yet, but we still got a couple hours left in the trading day. I kind of like what I'm seeing here, guys. A little bit choppy to the left of the chart. You might have some reward to risk, problems. But I kind of like the beginnings of the technical setup. What do you guys think?
It's tradable to me. You've got tight risk. If you want to make it a trade type of thing, you've got a trend.
No, I don't invest in GM, so I am thinking trade.
Yeah, no, it's tradable in my opinion.
Yeah.
I mean, you could map out a more conservative entry and you could have the discussion about, well, it's got to close there. And if that's the way your step system rules are built, and if you're out there and you've gone through the step system, you know the difference between aggressive and conservative type entries. So you could have those discussions, Matt, but I like the price development here. I definitely like it. Yeah.
I like it if it goes above the high.
Yep.
31.55.
There you go. Boom. Get an intro. And right there, there's a lesson for everybody out there. If you don't know where to find an entry, go down to an intraday time frame, find a pivot point, and you can find another confirmation point. It's only 20 cents away. And then you still
it is on it. In this market condition, ladies and gentlemen, it is number one rule without market confirmation, you position size according to risk.
That's right. Yep,
that is the number one market rule right now. Until we see confirmation, any option trade, position size according to max loss.
Mm-hmm. Mm-hmm. Absolutely. There was other M&A activity.
Write that down. Everybody write that down. Option trades, position size to max loss right now.
Well, I think that's the way you should approach it on long call, long put in most markets. Maybe half. I've always taught it that you pretty much have 50% of your option cost at risk. I mean, in almost any scenario, right?
Which means if your standard was 4% in a trade, you're willing to risk up to 2%.
Right.
When I say position size according to risk, you drop that from your standard 4% to you position size at that 2%.
That makes sense.
And that's until we get the breakout. Once we get the breakout and the confirmation, maybe you can position size according to your portfolio design rules. Maybe that's 4%, and you can position size with the stop loss that could equate to a 30 to 50% loss in the options. Mm-hmm. But as of right now, until the market confirms, based on everything we talked about, you position size in the option trading according to risk.
And by the way, Coach Noah out there says, what's the towing capacity of the gravity powered truck? I know that was kind of tongue in cheek. You guys were joking about gravity, but I will say one last thought on Nikola.
Are you kidding me? Go watch Interstellar. You'll see how much gravity can pull.
Yeah.
I just know that GM did its due diligence on that question.
Dude, they're saying Nikola's truck is going to pull 8,000 pounds. That's more than the F-150.
I don't know. I mean, this is the thing.
I care less about anything like
truck
that.
Guys care.
No. It's not that. No, it's people are going to come out and be like, oh, this truck, and people are going to be, oh, this and this. They're going to be speaking their emotions. Okay. To me, I'm seeing this more from an empirical legal perspective than I am an emotional, oh, I like this or I don't like that. And to me, what the hedge fund is saying is a nothing burger as of right now. Now it's going to create massive volatility on Nikola. And that's why Mark loves selling his naked puss, because he's getting a dime and then some right now. But for me, it's not going to make me shy away from GM. It would make me shy away from Nikola right now.
A couple of quick company items, Matt, and then the last discussion I actually want to have is DraftKings or Penn, and I do want to get to that here shortly. Gilead had an acquisition of IMMU. Don't really care too much about that. Amazon is hiring another 100,000 workers. That's adding to the.
Are we all just going to work for Amazon at some point?
And starting minimum wage, $15 an hour
this year, like 250,000 people this year.
And some of those corporate jobs, they're not all just factory jobs, but even
is
the factory
Bernie ever going to say something positive about Amazon hiring all these people?
He should. He was screaming for $15 minimum wage. You know what? They're hiring these people, and the minimum wage $15.
So am I going to have to see Bernie ripping on Amazon workforce type things today? Can the Democratic liberals, or the Democratic Socialists, excuse me, get the name right. Can the Democratic Socialists just give Amazon a little bit of credit since they've hired over 250,000 people this year?
I think you have to. How can you not?
Just a little bit of credit.
Yeah, these are good jobs too. You know, at a time where so many companies are cutting, it's positive to see, you know, and that's the thing about capitalism, guys. Things evolve, they adjust. The world will move on. Companies will come out victorious and others will be hurt. As things change in life, that's the nature of it. Winners and losers, no doubt about it. Amazon picking up more workers, Matt. And this is in the US and Canada, by the way, across many, many different locations. And by the way, they've added 35,000 corporate jobs this year as well, not just factory jobs. So I think it's a positive story. I liked it. I liked seeing that kind of headline. Last couple ones, there was some positive news out of Pfizer on a vaccine. They think that they can deliver one.
Am I the only one? And maybe I'm not. Am I the only one sick of vaccine news?
No, you can't be the only one. I'm sure. Okay. This is why it's the very last story.
I am so could care less. And I just work under the presumption that we're going to have a vaccine at some point. I just work under that presumption. So I don't get caught up in the vaccine news days because it happens every day.
Well, I don't think the market's getting caught up on them either. I mean, it's not really moving markets on the vaccine news.
Vaccine news days has not moved the market.
No. Yeah, no, it's like, dude, vaccine news is like a drug. Like, you know, initially, like 2.5 months ago, 3 months ago, anything gave you that big rush, right? It takes a lot bigger dose now to give you a kick and give the markets a kick. So like little vaccine news just doesn't move like it used to. It's going to take significant more and more every time.
Yeah. No,
again, I think we're all working under that presumption that
it's coming.
Whether it's December or January, there's going to be an announcement of a vaccine, and probably there's going to be a working vaccine that we can trust within a year.
Well, we already have a working vaccine we can trust. It's in Russia. I mean, just go pick it up. You know, it's not a big deal.
Yeah.
You're good with that, right?
I wonder if you're going to be the first in line for an American vaccine.
We'll see. The actual last discussion I do want to have, though, is DraftKings or Penn, because did you guys see the breakout here today? I'm sure you did. DraftKings actually even running through the show, and we had the first weekend of NFL football. I'm assuming some of the pop might be on that a little bit, you know, activity and traffic on those different apps, online gambling, online gaming, online fantasy football. These kind of themes definitely are very interesting.
I didn't know DraftKings was doing that today.
Dude, it's running 14%.
When did that? I mean, I knew it was up. I didn't know. Like, I didn't follow. Yeah.
Well, it ran after it drove that 40-30 level retest, and then ran.
Oh, it's been ramping. There's no doubt about it.
So I got a question, boys.
Yeah.
It's that day. All right. You're getting a breakout right now. Your first breakout happened above 40, but you're now getting a confirmation breakout on the all-time high. All right. Let me look this on a weekly chart very quick.
We got breaking news on this one that might adjust our analysis, actually. So we can look at the chart. DraftKings and ESPN enter into a co-exclusive content integration agreement. ESPN enters into co-exclusive agreements with both Caesars and DraftKings. It's coming across Business Wire right now. So some deal with
So
ESPN.
interesting.
Yeah.
Huh.
Listen,
All right. All right. Okay. With that news on the breakout of DraftKings
Mm-hmm.
or the snapback retracement test on Penn National Gaming. Weekly chart broke out, breaking out above 60. Let's look at it on the daily chart. You got the breakout of 60, the snapback retracement coming in to retest that channel at 59, and the reclaiming positive 7% up today. So these are both momentum plays here.
Mm-hmm. Mm-hmm.
Do you take the momentum on Penn, or do you chase the dragon on DraftKings? Now I'm speaking as you're not into a trade already, boys.
Okay, because I'm already in on DK.
Yeah, no,
That doesn't count.
Don't speak
I
your book here.
I think from a new entry perspective, I got to look at these. I don't want to answer without looking at the R to R and kind of thinking through it, because this is a momentum question, right?
Okay,
It's
find me a good target you can R&R on DraftKings.
I'm
right?
thinking risk. I want to think through the risk part of it, and the target part. I don't know how you could identify an exact target on those momentum, especially.
All right,
DK.
let me map them out for you.
Map out
Okay?
risk for me. 'Cause
I'll map out DraftKings really
Yeah.
quickly on momentum. Okay, so this is predisposing. No trade is in. You're just looking at momentum. All right.
Mm-hmm.
Okay, entry would have to be. Let's drop it down to a 30-minute chart. You'd have to trade the momentum above 48.07. So let's just put entry above 48.07, whatever your rule is. Stop loss for me on DraftKings would start at the tightest stop loss right underneath the breakout channel there at about 44.80-ish in that range. If you will, and that's the tightest stop loss you can give. That gets you right underneath a little bit of this base at 45.5. Gets you underneath that 9 EMA, but I really like that stop loss underneath 44. Okay, so stop loss, you can go conservative underneath 44.40, but I like the stop loss a little better under 44. Perfect stop loss placement if you're already in the trade would be under 41, but you just couldn't make that R&R work underneath that level. So I'm going to the old breakout here on the intraday right there at 44. All right. So let's say you're taking about a little over $4 and change of risk here. Okay. That's what you would be taking on the momentum side. Now on the target here on DraftKings, this is really difficult to target just given that you don't have a consistent type of trend line to really use potential average yield. It doesn't have a lot of evidence at that $50 mark. So you don't have a lot of targets you can really pick here, just given the fact that there's no historical evidence above those levels. and you really don't have any type of potential average yield to kind of look at here to kind of determine. So I'm going to have to go all the way back to when we did have a momentum trend, and that goes to the IPO of 18 to 32, moved up about 14 points there. I would break this down percentage wise if I had a little bit more time, but 27.5 all the way up to 45. So 27.5 up to 45 would be, what would that be? 17.5? 17.5. Okay, so you're looking at an average yield in the previous momentum trend. You're looking at an average yield right about, what would that be? Somewhere around 1575. Yeah, about 1575. If you're being very liberal with that support level of 40, you could probably target around 55, I would say. Now, again, you're using historical evidence to justify that 55 target, but that's what you kind of have to do in momentum type trading. So you got a potential target about $7 is what you have. So about $4 on the risk and about $7 at your target, which is above the 1-to-1 on first target, which is fine. On Penn National Gaming, you got your entry above the high of today, which would be 64.08. 64.08. You got to get a stop loss underneath 60 at a minimum. Taking a look at this from an intraday perspective, you got that little support level there at 60 right there. It's a significant whole number. And if you look at it on a longer time frame here, you can see that $58 level, 58.5 right there. You got a little bit of a 60 level right there. I'm going to say you got to start the discussion with the stop loss under 60, but you would love to get that stop loss underneath 58.5. You would love to get that stop loss under 58.5. So let's see if we can get that stop loss underneath 58.5. That you're probably taking on a little bit too much risk there, but I'm going to put it there anyway. So you got about 5.5 on the risk. Potential return, just looking at the previous movement here, you went from 33 up to 57. To see that go all the way up to the top, 33 to 57 equals 24, 24 plus the 50, you're talking somewhere around a $74 target. So in the momentum of this trend, to make it consistent with that trend, you're talking about it going from about 24 from 50, 74, that equals about $11 target. So you got about $11 potential return on pen versus the 5.5 risk. Now that's not based on where you would put the entries on ATR. I'm just using just the numbers. So you got about $11 and change target, 5.5 on the risk on pen. You got a similar R&R on DraftKings. Both of them have momentum behind them.
This is a tough one for me. Marky,
So we're just swing trading?
You're just swing trading.
momentum swing trade. Yep.
You're just swing trading. I'm being liberal with those targets too.
I'll go first. I would take DraftKings.
All right, team tackle before Mark answers. DraftKings based on the assessment or Penn. Let's see who wins here.
I think it's a tough call though.
So Tim, you're taking DraftKings.
I would. Yep. I would take
On a
DK.
swing trade. I can't chase a news candle that big following a news thing that, so I'm going to take Penn.
I like them both. I mean, both of them are momentum based. There is no doubt about
Yeah,
that.
I've seen too many news reversals, right? Big spike up, interday, no support forms on the interday chart, 5-minute chart breaks and comes back down quickly. I mean, just that's the only reason. I have naked puts on DraftKings that are going to expire worthless. What a shock in 2020. But so I like DraftKings. I'd love to get it at a lower price, but I'm not going to chase it on a swing trade here. I'll
Patty?
take Penn chart.
What about you?
I think the technical setup is a little cleaner on Penn. I love the momentum on the all-time break of DraftKings. I think traditionally the technical setup is a little better on Penn though. But it's close. I have no fault for anybody who chose DraftKings because it's really close for me. I think the more traditional technical setup being Penn, in my opinion, I would choose Penn. But DraftKings, I personally, I like DraftKings more, but I like Penn in the short term. Okay, let me rephrase. I like DraftKings long term a little bit more than Penn. I like the short term technical setup a little better in Penn.
Yeah, I would absolutely agree with that 100%. I do believe in the longer term, kind of thesis behind DraftKings. And even Bradley brought up a really good question.
But,
I wonder if
Jekyll and
Michael
Hyde,
Jordan.
I do want to
deal.
say things in terms of the Jekyll and Hyde, don't chase the high. If you didn't chase breakouts in the last 10 years, you missed on a potential, 350 breakouts that were legit and actually made money. So I agree with you. If it was just running on news and it was overextended, that's one thing. But that's not what we're seeing on DraftKings today. You're seeing the breakout of that 52-week high, which is a positive thing, not a negative thing.
Yeah, no.
And the support bounce at 60 on Penn, which is a positive, not a negative thing.
No,
So,
I mean,
The best trade might be Caesars, by the way.
I mean, the nice thing about DraftKings, even if it retraces here, it's extended that range, right? It's extended that range on the breakout. It would have been a nice day trade, on that break for sure.
Listen, if you can't trade breakouts and all you can do is only trade pullbacks, you're going to have a very, very boring career.
Breakouts are easier too.
Breakouts are amazing.
I love breakout trading. In fact, I think for new traders, in terms of understanding how to set up an entry point, target, stop loss, all of it, you got to know the 4 core tradable patterns, and breakouts are definitely one of those first ones you should learn. Learn to trade them both, but I love.
No, it's only the
trading.
velocity of the candle on the breakout. If I'd have caught it earlier, that would have been beautiful, right? It's just, man, it's keep.
No, and if Jekyll is referencing don't chase that candle at the very high, you're right. You want to wait for it. But what I was talking about is the continuation of the momentum above the highs.
Mm-hmm. Mm-hmm.
No, it's listen, I like the space. I like the space. You like the space. Tim likes the space. We all like the
Wall
online
Street
betting
likes the
space.
space.
Wall
Look at
Street
Wall
it.
Street likes the
Yeah.
space. Everybody likes the
ESPN
online
likes the
betting
space.
space.
Yeah.
Hey, listen, Michael Jordan loves the space.
Dude, I mean, I haven't thought about this. I wonder if Michael Jordan is going to be very influential in getting some of these deals done. That question was in the chat from a Team Tackle member earlier.
I
You
think
know,
that was the kind
that's
of
the whole point,
assumed
right?
when Michael Jordan came into
That
DraftKings as an owner.
that
Yeah,
signing is
I think that's
huge.
kind of part of the job description, Michael Jordan. Hey, listen, if you're going to be an investor in DraftKings, we need you in some of those board conversations with ESPN so
Mhm.
that they can just go all goo goo gaga over Michael Jordan.
I think I have sold now 8 naked puts on DraftKings, all expired worthless. What's the over on under till I finally sell a naked put that gets put to me?
Well, you're selling 5 deltas. So why don't
I mean,
why don't I put the over under at 25? How about that?
I'd like that.
25?
That'd be
I think
nice.
Put the over
25 is a
under
good
at
line.
95. I'll
Might
just
be
use
nice.
the option delta.
Yeah. All right, guys, that's all I've got here today, and we are going to record a podcast here at some point on Monday, like we always do. So let's start wrapping this one up. You know, good show to start the week here, guys. 9/14/2020. We're going to be here every single day that the markets are open this week. Same time, same station. If you've not done it yet, click subscribe, click the bell, come back and join us. We have a lot of fun in these halftime reports, and if you're regular, we appreciate you as always. Appreciate the thumbs up for those of you who get it out there. Marky, final thoughts for our team out there.
Listen, you know, I talked about it yesterday in the Sunday prep class. We talked about it to lead the show today. Everything right now is that technical battle in the intraday zone on the S&P 500 and on the NASDAQ. So, that's it. It's the theater, and I know we all. Well, not all, but like a lot of us probably are really rooting for that 50-day moving average to hold and support and eventually break out. That's great. We can all root, right? But have a plan on what you're going to do with existing positions and new entries. If you get a bullish confirmation signal or if you get a bearish confirmation, have that plan laid out ahead of time.
I love it. Maddie, final thoughts?
I'm not sure if I have final thoughts today. I've had a lot of thoughts today.
Yeah. Well, there's always one last thought.
Oh,
it might even
final
just be
thought.
have a great day or something, you know? I mean,
I have to do that. Okay. Tackle, have an amazing day. I love you guys. But no, my honestly, Tim, when you said we got a podcast, my mind went straight to the podcast.
I just triggered you there. I'm like,
Well, we're going to have a conversation on the Bill Ackman proposal, on that $6,500 proposal for retirement to give people that are born in the U.S. I think it's a fascinating conversation. I do believe we are going to be going through some retirement crises as the baby boomer generation retires, as other generations get closer to retirement. So I think there's going to be some retirement conversations over the next couple decades that are very, very difficult for our society to have. And whereas, we have been born and raised in the 401k retirement model that's been dominant since really the 80s, but the creation of the 401k model was really kind of in that 1970s. It's been the dominant retirement model of our lifetimes. There's no doubt about that. 50% of Americans have a 401k where they save their own money through the 40-year career they work in terms of the stock market and whatnot. It's been a boom for the stock market in the last 40 years, no doubt about that. But there is an upcoming retirement crisis to a certain extent, and I think our society is going to have some very difficult conversations in that. And I think what Bill Ackman proposed is something that is interesting, that we should take serious, because I don't think people realize how much money we spend on retirement as a country. And could that cheapen that cost long term? Even though it's an initial cost up front, can that cheapen that cost long term? I think it's an interesting conversation. So when you said we're going to be podcasting, I immediately went into thinking about retirement models and podcast mode. And although nobody has the end all be all solutions to a retirement crisis, I think it's a conversation we have to have as a society.
Looking forward to it as well. I mean, I think these are very important parts of financial literacy and education. How many people come into the markets because they want to figure out their retirement accounts? I mean, I know we all love our trading as well, but investing in long-term, wealth accumulation and building is really what the markets are for. And, you have to learn how to keep it, build it, protect it, and have the right accounts for it. So I'm looking forward to the conversation. My last thoughts, just go Bears. We got to win. Found a way to get one win over the stinky Lions. We are probably an 8-8
Listen,
football team. I'm
that
gonna
was
tell you
not
that
a
right now.
win by the Bears team.
No,
Listen,
I
I
told
told-
you that on the
That
phone.
was the Detroit Lions do what the Detroit Lions do and find a way to lose a game they obviously should have won. Miami lost. They just did what Miami does. They lost. The Bears just didn't lose.
Yeah,
And listen, I told my two brothers this morning. I'm coming out of a 25-year closet,
Coming out of the closet, he's back.
and I'm embracing my childhood team that I've been pissed off at for 25 years. So I
Wait,
am now.
hold on. Let's see if Team Tackle knows who your team is. Who's Mark's team? Who is Mark's childhood team? If you could think of any team in the NFL that fits who you think Mark would be a fan of growing up. He calls me up last night, Tim.
And
He's
if
like-
anybody says the Jets, I'm never answering your customer service email ever again. So just be careful on your answer there.
you're a
He
child
called
of the
me up there.
70s and 80s. Yeah, go ahead, Manny.
He calls me up yesterday and he's like, hey, have you checked out Podcast Prep? I'm like, no, I haven't checked it out yet. I'll check it out later. He's like, I've been thinking about this and you know what? It's time. It's just time for me. And I'm like, it's time to do what? This could go anywhere with Mark. And he's like, it's just time for me to embrace my childhood again. I'm like, Mark, you've spent the last 10 years embracing your childhood. What's going
Well,
on?
to be honest, it's the last 50 years to be fair.
And he's like, no, I am back. And let's see who gets it. All right, we got the Patriots.
Dude.
Now, Carlos, think about the Patriots in the last 20 years and think about what team was the Patriots before the Patriots created their dynasty. Washington? Nah. Mark's
Redskins
not
had some good teams.
They had some good 80s.
They
They
did.
had some good
They
teams.
did.
in the
Joe
80s.
Gibbs and stuff. yeah.
Terrence comes in strong with the Dallas Cowboys. And Terrence, ding, ding, the witch is dead.
How about them
is
Cowboys?
a Dallas
Listen,
Cowboy fan.
I've been
He's
pissed
back
off at Jerry
strong.
Jones for 25 years, ever since he fired Jimmy Johnson. I thought it was a vain, egotistical thing to do, and the Dallas Cowboys have paid the price. I just can't take it anymore. I need a team. I get Dallas Cowboys, so go Star, go. So
He's back.
He's back. Well, enjoy
Okay,
it.
now the question is, how long does this last?
you know,
Dude, well, I
anywhere
mean-
between 1 minute.
Does it
and the
last?
rest of
Does
my
it
life.
last the year, Tim?
I think it does. I think it does
think it
because
does.
Mark's at a point in his life where he loves this concept that he doesn't have to use logic in his brain to just be a fan. Just cheer for him, have fun, watch him play, complain when the refs screw you over, just like every Cowboys fan did yesterday.
Oh, they're all
Celebrate it when the Detroit Lions give you a win, all that kind of stuff. Just
to
be
be
a fan.
fair.
Just be a fan.
To be fair, that was not pass interference. That was not pass interference. What's his name? The cornerback, great, one of the best cornerbacks in the game. He did his NBA flop job on that pass interference call. That was not pass interference.
I didn't see the play.
Oh,
I
man.
didn't see. I gotta watch
It was a bang bang end of the game. They're fighting for the ball. Let the cornerback and the receiver fight for the ball.
Maybe it wasn't, but Cowboys fans complain more about the refs than any team in the NFL. So I'll just say that.
Yeah,
Mark brought up Packers.
they're up there.
Packers fans as well do. But enjoy, Mark. Welcome back. It's good to have you. Got 2 more NFL games tonight. I'll be watching them. But we are done here for today, guys. Dub Bears as well. Terrence, he's a Bears fan. I love that. Guys, we'll be back tomorrow, same time, same station. Enjoy
Yeah,
it.
Greg, I was thinking about you yesterday as Miami was losing, and I saw the Browns losing. I was like, me and Gregory, we're brothers from another mother. We
Browns
both have the
fans.
same pain.
Yeah. I can't imagine being a Browns fan. It's
Try being a Dolphin fan.
Yeah. Try being a Clippers fan. They have never won anything.
Oh,
So
really? They have a game 7 tomorrow night, though.
yeah, I haven't kept up on the NBA after the Jazz went out. I got to go look it up. Who's winning? All right, we're done today, guys. We'll be back tomorrow.
Later, everyone.
Yeah,
Later all.
enjoy. And Maddie, I think you are the host, or Mark is when you got to take down the stream. Top left is Zoom.